Limited Q2 and H1 FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jasbir Singh, Executive Chairman and CEO and Whole-Time Director of Amber Enterprises India Limited. Thank you, and over to you, sir.
Hello and good morning, everyone. On the call, I am joined by Mr. Daljit Singh, Managing Director, Mr. Sudhir Goyal, CFO, Mr. Sanjay Arora, Director, Engine Electronics, Mr. Sachin Gupta, CEO of RAC Division, and our IR advisors, SGA. We have uploaded our results presentation on the exchanges, and I hope everybody had an opportunity to go through the same. Amber, over the years, has evolved as a comprehensive, backward-integrated and diversified B2B solution provider. As you all must be aware that we started our journey from room AC sector comprising of window AC and then split and inverters, and further diversified into cassette air conditioners, ductables and package units of higher tonnages. Being backward integrated over the period, we spread our wings in RAC and RAC components, spreading into different geographies of India. Today, we command 29.4% of manufacturing footprint of Indian room air conditioner industry. To gain an edge over the changing market patterns from fixed-speed AC to inverter ACs, Amber in the year 2018 ventured into the world of electronics by acquiring Ilgin and Ever and became a market leader in inverter air conditioner segment. As we graduated in our skills and know-how of electronics, we learned that electronics is an ocean which needs to be explored. In the past 5 years, a stint which started from inverter AC has now diversified into providing solutions for home appliances, consumer electronics, wearable and wearables, telecom and automobile segments. Recently, we entered in a joint venture with Nextbase Marketing Private Limited, having its brand name Noise, to undertake the manufacturing, assembling and designing of wearables and other smart electronic products, thus contributing strongly towards Make in India initiative, which will help reducing import dependency, promoting top-tier manufacturing and positioning India as a global hub for industry-leading wearable technologies across various categories. Being number one smart wearable brand in India and third globally, Noise in-depth understanding of the category combined with Ilgin's expertise in manufacturing, resources and innovative capabilities will help build a world-class manufacturing ecosystem in India while contributing significantly to the burgeoning growth of the entire category. Going forward, we clearly see our electronic division becoming Amber 2.0 strategy, having exponential growth opportunities in the year to come. Furthermore, to expand our addressable market in heating, ventilation, air conditioning segment, we acquired Sidwal during the year 2019 to cater the mobility infrastructure of country, which includes railways, metro, bus and defense. Sidwal, being a pioneer in all indigenous roof-mounted air conditioners for rail coaches, carved out a niche for itself by developing top-of-the-line products over the decades. Post-acquisition, we ramped up Sidwal facilities, expanded R&D capabilities, and enabled Sidwal to cater different applications of metro, railways, HVAC solutions for new age application trains like Vande Bharat Express, metro ACs, and trains like RRTS, Namo Bharat. Today, Sidwal is a leader in mobility air conditioning space and is further turning its wheels by expanding its footprints into railway subsystem space while introducing products like doors, gangways, and pantry systems, hence enabling Sidwal to increase its wallet share in the bill of material of passenger coaches. With Indian government launching its plan of modernization of Indian Railways by launching new Vande Bharat Express and Urban Development Ministry to have new lines in the new cities and existing metro lines to expand its network, exponential growth opportunities are unfolding for Sidwal. We are currently inching towards finalization of our first global order for Sidwal products, and this division is also set to become Amber 3.0 strategy going forward. We also feel pride in sharing that Sidwal has also been a part of recently inaugurated new RRTS Delhi Ghaziabad Meerut corridor journey to be known as Namo Bharat, where it manufactures air conditioner systems for the train. Looking into the current business and manufacturing landscape change in last couple of months, we have witnessed the customer demand getting fragmented into various forms like individual components, modular kits, finished products, sub-assemblies. Hence, we at Amber now onwards shall be doing a reporting in 3 divisional formats. For the sake of simplicity and for our own focused approach, we shall be looking towards 3 divisional concepts hereon. As explained above, all the 3 divisions, consumer durable, which comprise of room AC finished goods, room AC and non-room AC components. This is one division. Second division is electronics division, and third is railway subsystem and mobility. All have multi-fold growth opportunities going forward. I will now take you through the consolidated financial highlights. On the revenue front, for H1 FY24, revenue increased by 2.1% to INR 2629 crores versus INR 2576 crores in H1 FY23. We have reported revenue of INR 927 crores in Q2 FY24 versus revenue of INR 750 crores in Q2 FY23. On operating EBITDA, on H1 FY24, operating EBITDA stood at INR 203 crores versus INR 182 crores in H1 FY23, a growth of 11.5%. For Q2 FY24, operating EBITDA increased to INR 65 crores compared to INR 52 crores in corresponding quarter last year. Operating EBITDA is before impact of ESOP expense and other non-operating income and expenses. Operating EBITDA margins for H1 FY24 stood at 8% versus 7% in H1 FY23. PAT of H1 FY24 stood at INR 41 crores versus INR 41 crores in H1 FY23. For Q2 FY24, PAT loss stood at INR 6 crores versus loss of 2 crores in Q2 FY23. Increase in depreciation on account of capex incurred and finance cost increase due to increase in debt and higher cost of finance, which led to increase in PAT loss. Net debt of September 23 stood at INR 956 crores from INR 662 crores in September 22. We expect this debt number to come down to in the range of 650 to 675 crores by the financial year end. Working capital days for September 23 stood at 52 days, September 24, compared to 39 days in September 22. And we also expect the net working capital days to normalize by the quarter 4. Overall, capex for H1 FY24 stood at 149 crores, and we plan to incur a total capex in the range of 350 to 380 crores in the current financial year. Coming to the divisional highlights, we can now take you through all divisional highlights.
Sorry to interrupt, Mr. Jasbir Singh.
Yeah.
Hello? Yes, sir. Now we can hear you, sir. Please go ahead.
Coming to divisional highlights, we shall now take you through all 3 divisional highlights, which are as follows. Consumer durable division. In consumer durable division, the room AC and the component segment. For H1 FY24, this division increased to INR 1744 crores versus revenue of 1799 97 crores in H1 FY23. Operating EBITDA stood at INR 114 crores versus 99 crores in FY23. For Parvartika, we have set up a new facility in Chennai, which is in process of scaling up. For Amber PR cross-flow division, we have expanded in Pune, which is also in the process of scaling up. We have witnessed a mixed trend for the first half of this financial year 2024. Quarter 1, which is usually a strong quarter, was impacted by unseasonal weather patterns, resulting in increased inventory levels. However, rising temperatures and festivities on the anvil got the demand back and has helped in liquidation of inventory, thereby leading to almost normalized levels of channel inventory. We anticipate a year-on-year growth in the single digit for the room AC industry in the fiscal year 24, which bodes positively for Amber. In this consumer durable division, we have a motor segment. On the motor segment, for H1 FY24, revenue stood at 135 crores versus 130 crores. Operating EBITDA stood at 13 crores versus 15 crores in FY23. Our profitability was slightly impacted a bit here due to increase of employee costs owing to inflation. However, for motors division, we expect exports to increase in the coming quarters and further expect the industry to grow in the range of 25 to 30%. Coming to electronics division. On the electronics division, which includes IL JIN and Ever, we have performed phenomenally well. Revenue for H1 FY24 increased to 515 crores from rupees 449 crores in H1 FY23. EBITDA increased to INR 24 crores versus INR 17 crores in H1 FY23. The division has witnessed growth in revenue, operating EBITDA as well as PAT due to product mix and growth of existing customers. During the quarter done by IL JIN entered into a JV with Noise. This JV will be 50% owned by IL JIN and 50% owned by Nextbase, and will have a new plant set up in Noida. To begin with, IL JIN will develop local comprehensive integrated solutions in the wearable space and further intend to move into other electronic products. This is an exclusive tie-up with Noise, and going forward, this JV will be catering to other brands as well. In FY23, IL JIN did a revenue of close to 1100 crores, which included 330 crores of wearable segment. With this JV going forward, we expect additional 1000 crores top line by next fiscal year in this JV, and a capex of about 10 to 15 crores, and expect margins to be in the line with it. Further, we have also added customers in telecom, automobile, and wearable space in this segment. As mentioned during our prior discussion, a significant portion of the PCBAs required for non-smartphone applications are currently met through imports. The government's commitment to promoting domestic electronic manufacturing offers a significant potential for the substantial growth, and we anticipate a growth rate of 35% in FY24 for this segment. We also expect this division to increase its margin going forward. We are targeting an EBITDA margin in the range of 6.75% to 7% range, and doubling its revenue over the base of FY24 year base in next 2 years' time. Coming to the third division, railway subsystem and mobility. On the mobility applications, the H1 FY24 revenue stood at 235 crores versus 200 crores in H1 FY23. For H1 FY24, operating EBITDA stood at 52 crores versus 51 crores in H1 FY23. The division has witnessed growth in revenue, operating EBITDA as well as PAT due to growth in the current operating segments. We are adding new product categories for metro coaches, which includes gangway, doors, pantry system, HVAC system. Due to our recently announced technology transfer agreements, we have started receiving orders for the new product categories, and we are glad to share that the order book of Sidwal has significantly jumped and now stands at 1140 crores. We expect mobility application division to grow to in the range of 25% in FY24 and double its revenue in next 2 financial years. With this, I would now open the floor for Q&As.
Thank you very much. We will now begin the question and answer session. Participant present on the audio bridge who wish to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. We will wait for a moment while the question queue assembles. The first question is from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Good morning, gentlemen. Congratulations on a good set of numbers. My first question is on electronic side. While we have a robust commentary for this division and have also delivered good growth in terms of margins, our top line for this quarter has been quite tepid at 3%, and on a QOQ basis it has been a decline. So since this is a non-seasonal segment and our historical trend has been quite good, so why only a 3% growth? So that's my first question.
Sanjay, would you like to answer this question? Hello, can you hear me?
Yes, sir, we can hear you. Please go ahead, sir.
So this growth was quite mainly due to the, muted growth in the AC segment. So like in the electronics division, we supply a lot of controllers, and the AC season was quite damp this time, and it also affected the growth. So that was the main reason of the less growth in the electronics.
So would it be possible to give a breakdown for electronics in terms of telecom, hearables and wearables, automobiles and PCBA? That will help.
I think Sudhir, that you will have to do.
Sir, can you please repeat? We can't hear you.
So Sudhir Goyalji, do you have that breakup, or can we give that later to the team? Sudhir Goyalji.
Sir, Mr. Sudhir Goyal is not connected, sir.
Oh.
Anyway, Sanjay, we can send it to Natasha later on, the breakup of the 4 segments within the electronic division.
All right. Thank you so much, sir. So my next question is on the consumer durable segment. So first of all, has there been any price discounting which you may have taken as an ODM for the brand?
Price discounting?
Yeah. Has there been any price discounting or any discounts that were passed on to the OEM players?
No, there's no price discounting which we have passed on to any customers. The commodities now has eased off, so that is a quarterly lag basis. I mean, whatever the impact is, that will automatically get transferred.
All right. And so lastly,
Ms. Natasha Jain, may we request you to rejoin the queue?
Sure.
Thank you. Our next question is from the line of Dhruv from Ambit. Please go ahead.
Hi, sir. Good morning. I had a couple of questions. So first was on the electronic side, just to build on the last participant's question. So we've seen a tepid growth, and while you've given a guidance of, say, close to 35-40% growth in the full year, right? So do you think you can continue the momentum in the second half? We'll see a better number there or so?
Yeah, we have added, new applications in this sector. We have added auto EV space. We have also added wearable and wearable customers, and telecom business, which we just onboarded in Q1 has started. So we expect that we should be able to match in the range of 35% growth. for this division.
Okay. And sir, on the standalone side, we've seen a strong growth. However, I think Sanjay ji made a comment, that the AC season was tepid. So that growth that we are seeing, was it on account of newer customers just trying to, connect? I think there is a little bit of disconnect in that sense.
So multiple reasons, Dhruv. New customers, new applications, new products.
Sorry. Hello.
Hello?
Yeah.
Yes, sir. Please go.
Yeah, and sir, on the, can you just elaborate a little bit on these new applications per se?
So the new applications which I spoke, like we've added telecom sector components. We've also added telecom products in the electronics division. Then we have added auto EV space. We have added some customers in the wearable space. So all these put together, plus there are some customers which have been added in the refrigerator and washing machine space. So all put together is giving us this growth.
Thank you. Sorry to interrupt, Mr. Dhruv. May we request you to rejoin the question queue for follow-up questions, please? Thank you. Our next question is from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
Good morning, sir, and thank you for the very detailed earlier commentary during the call. So just two questions. Firstly, any update on PLIs, the two that we have received for AC components? And secondly, for next base, you did mention that about 1,000 crore additional revenue. So just to clarify, this 1,000 crore will be for the JV as a whole, so we'll be taking about 50% of that, or 50% is equal to 1,000 crores for us?
No, the JV, Sonali, will have total 1,000 crores. And since it's a 50-50 JV, we will not be able to consolidate it in revenue. It will be a separate revenue which will be booked in the new company. And we will be able to consolidate the PAT in our region on the 50% part of it. As far as your first question is concerned regarding the PLI, we are eligible in the PLI. PLI audits have started. A couple of factories have been visited, and we expect that by Q4 we should be receiving our PLI benefits. The PLI benefits.
How much incentive we are expecting in FY24 and 25, if we can, share that?
So for the first year, it was about 16 crore, and this financial year we expect the incentive to be in the range of about 28 to 30 crores.
Understood. Got it. Thank you, sir.
Thank you. Our next question is from the line of Aditya Bhartia from Investec. Please go ahead.
Hi, good morning, sir. So my first question is on the electronic side. How are we really looking at this vertical? Would it be an extension of what we have been doing until now, or can it be completely different, a foray into even industrial applications, defense, aerospace? Are all options open, or are we looking to be specializing in certain fields within the electronics sector?
No, since we have now learned in the electronic space, and we are expanding our knowledge base. So we are very open. We have taken two-pronged strategy. One is to increase our margins, because we started with our lowest margin businesses available in the PCBA, which is the consumer durable part, whereas the defense and aerospace and the railways and industrial is higher margin businesses. So we are inching towards that. So as you see, we started with consumer durables, then we entered into telecom, then we added wearable, and now we've added auto EV space. So we'll continue to grow in the space of PCBA applications while increasing our margins. And we also intend to backward integrate in the component space moving forward, which will strengthen our moat in this division. So we are seeing this as a Amber 2.0 story. Like what we did in air conditioners, we started with manufacturing just a sheet metal box of air conditioners, and then started producing air conditioners, and then backward integrated. And today we can deliver 70% of bill of material of air conditioners, including the full boxes. So similar strategy will be followed over the years in this division, and we are very excited. I think this division has a potential to surpass room AC division in 3 to 4 years' time.
Understood, sir. And so you spoke about, I think, 6.5, 6.75% kind of margins. Given the kind of mix that we are having today, how are those margins going to be attained? Because I understand that room AC or consumer durables is slightly on the lower side in terms of margins. Even possibly wearables and hearables could also be similar margins, or is my understanding incorrect?
No, you are correct. The consumer durable space will continue to be lower margin space. But since we are adding new applications which are at a higher margin, that will grow this division's performance to a better margin, and we are intending to backward integrate into some components which are at a higher margin space. So consolidated basis, you will see this division going to almost about 6.75 to 7% range. When we acquired this company, it was just 2.8% EBITDA company, and it's already inching towards 5% now. And we'll continue to grow the margins.
Sure, sir. And last bit on...
Bhartia, may we request that you rejoin the question queue for follow-up questions, please? Thank you. Ladies and gentlemen, before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Onkar Gudadare from Shree Investments. Please go ahead.
Yeah, hello. Good morning. Am I audible, sir?
Yes.
Yeah, good morning. Very audible.
Yeah, thank you. My question was regarding, you mentioned about doubling of revenue from FY24 for electronics division and in 2 years, and doubling of revenue in 2 years for railway systems and mobility division as well. Just wanted to know what's your long-term strategy on both this one, since you are mentioning 2.0 for electronics and railway subsystem 3.0 for Amber. Just wanted a broad long-term view on this two aspects.
So broader long-term view is that the division will be heading for a very independent growth and have a potential of becoming as big as Amber is today going forward. So it is very simple strategy which we have opted. We actually acquired into adjacencies, and then we have grown those divisions into various applications. In electronics, like I have explained, that we have already entered into 4 applications. Now we are adding some more applications in that. Plus we are going to backward integrate into component space of the electronic PCBA part, which will help us both top line growth as well as the bottom line growth. In the Sidwal, the mobility division, when we acquired this company was a small company, and the EBITDA margins were also less. So we've already traveled a journey last 3 years from 16% EBITDA to almost 22% EBITDA, and grown the top line by almost 3 times in last 3.5, 4 years. What we are going to do next is that today we are contributing only 4 to 5% of the bill of material of the passenger car. Now, if you can imagine the kind of orders which have been floated by the Indian Railways for new Vande Bharat Express trains, and also by the Urban Development Ministry, which has already shortlisted 25 new cities to have new metro lines, and the existing cities having metro lines are going to expand its network. There is an opportunity, huge opportunity, which has come for the complete railway application passenger coaches, which is called rolling stock. So in rolling stock, if you see, we currently are giving a solution of only 4 to 5% of our bill of material. So to become a meaningful supplier in the whole railway subsystem, we've now charted our growth story for getting deep dive into the bill of material for increasing our wallet share with the existing customers. Now, how do we do that? We started forging our alliances by signing technology transfer agreements. We have done 2 TOTs, one with Taiwanese company and another one with Canadian company for doors and gangways. And we have developed pantry systems. So today we can offer 10% of bill of material in a passenger car to a customer. So from 4% we have reached to 10%. And moving forward, we are going to further do some more alliances, and we wish to reach to 25 to 30% of offering, becoming a multi-product company in the railway subsystem part. So within India, there's a huge growth opportunity. there is a growth opportunity in the global space as well. So we are excited with this complete growth opportunities coming for this division. And by forming alliances, by TOTs for JVs, we will reach to a 30% offering of a bill of material in next 2 to 3 years' time. And that's how we are very confident that we can double the revenues from current levels and also increase some margins.
Just one number I wanted. For FY23, what was the revenue of electronics division and what was the revenue of railway subsystems? You can provide that.
So FY23 revenue of electronics division was 1100 crore plus, and for Sidwal it was 422 crores.
Thank you.
Thank you very much.
Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Arafat from Incred Capital. Please go ahead.
Yeah, hi sir. Thanks for taking my question. So my first question is on capex. So last year you invested almost 750 odd crore rupees, and this year also you guided for a 350 odd crore rupees investment. So I just want to know which are these areas you will be investing. Of course, it will be it's a non-AC, more about a yearable and variable. But again, if you can guide on that, and again, what asset turn you're expecting over a longer term with this investment?
So we will be investing in all the 3 divisions. Largely investments are happening in electronics division and the mobility division. Plus, this complete 380 crores includes the maintenance capex of all 27 plants. It also includes the R&D capex. And some new products which we are developing for the room air conditioner division. So in total, we will be reaching currently. We on the return side, as guided in the markets earlier, also we will repeat. Last financial year we've done about 15% ROC, and we expect ROCs to jump to about 16% plus this year. And as guided earlier, we will again maintain that guidance that we should see Amber on a console basis delivering a 19 to 21% ROCs in next 2 to 3 years' time.
Okay. And my next question is on the PCBA side. Let's say you are now have the AC PCBAs, refrigerator, television and all. Is there any plan to enter, like you said, high growing area like aerospace and defense and medical and that matter? So any plan to enter that segment heavily, sir?
Certainly there is a plan to enter into various applications of PCBA. If you actually strip down the availability of the PCB applications, almost about 8 to 9 sectors are prevailing. So first of all, on the bottom line point of view, the top bottom line contribution is aerospace and defense, and then comes the railway, then industrial, then telecom sector, then automobile sector, then healthcare sector is there, then hearable, wearable and consumer durable. So we started our journey from consumer durable appliances side. We are inching into adding some new customers, new applications. We will continue to do more applications in this division. It will take time. Defense and aerospace is a little longer time duration because their testing periods time, validation assessments takes long time. Similarly is the case in the industrial and railways. But yes, we have initiated our processes.
Thank you. Mr. Arafat, may we request you to rejoin the queue for follow-up questions, please? Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Aniruddha Joshi from ISEC. Please go ahead.
Yeah, so thanks for the opportunity.
Sorry to interrupt, sir. May I request you to mute your line after you are done asking your question, please?
Sure. Is it okay now?
Yes, sir. Please go ahead.
Yeah, sir. Now we are seeing most of the brands are setting up their own facilities. So do you see any impact on the industry and on us, considering there will be likely excess capacity in entire air conditioner as well as components manufacturing? Also, what is current industry capacity versus what is it likely to be, let's say, after 1.5 year, when most of the new plants will come on stream? And what is Amber's strategy to tackle the steep increase in industry capacity as well as the likely competitive pressures that may emerge post this capacity? Yeah, that's it from my side.
So the brands basically started investing in their own capacity from a year and a half back, and most of them have started their facilities. Only 2 customers are pending to start their facilities. Probably, I think in Q4, one customer will start, and by FY25, one Japanese customer will start. So the dust has already been settled with this landscape change of complete insourcing versus outsourcing by some of the brands. And we have already aligned in tandem to their strategy towards moving into more component supplies rather than finished good supplies. And we are seeing some benefits out of our strategy, which we focused on. Moving forward, I think there is no more announcements coming up from any brands for putting up new facilities. Yes, you're right. Industry will sit on a little bit over capacity for maybe 2 to 3 years' time. Because recently, anybody who puts up a factory, they don't put up a factory only just considering year or 2 years' time. It's a good horizon which they take. So for coming 2 to 3 years' time, we will be seeing overcapacity in the industry. But our strategy is to supply them components whichever brands have started. So whichever company started their factories, we are giving them components from various geographies, whether in north, west, or south. We have plants all over place, and we can deliver 70% of the components which goes into air conditioners. Our wish list is that everybody buys all those 70%. But had that been true, we would be sitting at 70% of our market share. But today we are at 29.4% of the manufacturing footprint of AC. I think we are excited by the growth of this whole sector. In the last 5 years, the room AC volumes have jumped from 4.2 million to 8.5 million. It has doubled. And in the next 5 years also, there is expectation of more than doubling than this. So we expect 8.5 million number to go to 20 million number. And exports are also happening from India. So for Amber, it is a manufacturing footprint which we see as an addressable market, where we think that there's a lot of growth. Even maintaining the market shares which we have, we should see a decent growth coming out of this division.
Okay, sure, sir. Very helpful. Thank you.
Thank you. Our next question is from the line of Adesh from Motilal AMC. Please go ahead. Mr. Adesh, your line has been unmuted. Please go ahead with your question. Mr. Adesh, may I request you to unmute your line from your side? As there's no response, may we move to the next question, please? Our next question is from the line of Renu Baid from IIFL Securities. Please go ahead.
Yeah. Hi. Good morning, team. My first question is to understand that while we have embarked on pretty aggressive growth in both mobility as well as electronics business, as a company, what are we doing to build capabilities with respect to teams, people, and what kind of capacity expansion in your view is required to double these revenues in the next 2 years? That's the first question.
Renu, the divisions are already headed by professional CEOs, and they have a complete team in place. As we are expanding our applications, we are enhancing our team strength at the senior level as well as at the bottom level. And to increase, this is happening at both the divisions. And also, and we are taking proactive approaches because we know which divisions, which applications we are entering into. So there is a proactive approach on the team strength which is happening. And few of the members have already joined in. On the capex side, Sidwal will be bringing up a new plant moving forward since already we have entered from single product category to multi-product category. Now we are giving solutions not only in air conditioner space, but for the doors and gangways and pantry systems. And moving forward, we are also entering into further components in the railway subsystems. So there will be definitely greenfield expansion and brownfield expansion both happening and in both the divisions moving forward.
So any capex that you have broadly outlined at this point in time, even if it is slightly rough in terms of broad estimates, next 2 years capex?
So even if I talk about, I think the capex outline is already there because we are a PLI participant, so we are doing capex in that. We will be doing about 75 to 80 crores capex in IL JIN and Ever, and we expect slightly lesser capex this year in Sidwal. But since the applications are getting addressed by next financial year, maybe next financial year, we'll come up with one greenfield facility.
Sure.
It will include about a capex of close to about 80 to 100 crores next year.
Okay.
Sorry to interrupt, Ms. Renubed. May we request you to rejoin the question queue, please, ma'am?
Sure.
Thank you. Our next question is from the line of Nirav Vasa from Anand Rathi. Please go ahead.
Hello, sir, and thank you very much for the opportunity. My question pertains to the debt part. Sir, as I look at in Q2FY24, the gross debt of the company is close to 1,450 crore rupees. Wanted to understand what can be our peak working capital requirement as we get in the peak summer season, and how do we, because this gross debt to equity ratio is quite close to our net worth of now almost 1956 crore rupees. And since we have aggressive plans going forward as well, how do we intend to fund them?
So one is that you're seeing from the gross debt side, we have close to about 400 odd crores sitting in investments in fixed deposits and bonds. So net debt is little less than 1,000 crores. And as explained during my commentary, that we expect this debt to be in the range of 650 to 675 crores by the March end. This is a general trend in our industry. And this year, because this was a very poor season for air conditioners, a lot of inventory was piled up, which was supposed to be paid on time, and hence the debt got increased. But as the inventories are getting liquidated, it will come down. But so internal cash accruals are very strong. If we see from next 2 years perspective, as we have guided that there is a likelihood of doubling our revenue in two divisions, and the percentages are also getting increased. So internal accrual is good enough for catering to the needs of the capex requirements of the company.
Sir, based on the current scenario and the growth rate that you're expecting for the domestic room air conditioner industry, would it be possible for you to share any kind of volume number that you are targeting for domestic air conditioners, and how and what can be the number for exports that we can look in terms of volumes in the forthcoming part of the year? Thank you.
See, I can talk about the industry as such because, our landscape has shifted because we are largely now supplying components, sub-assemblies, semi-knockdown kits, and room air conditioners as such. I think industry did about 8.5 million last year, so we expect industry to be in the range of 9 million this year. If all goes good by Q4, it all depends on how the summer season pans out to be. So we expect a single-digit growth in the room air conditioner sector, at least in this financial year. I mean, Q1 was a negative by 20-25%, but we are seeing some makeup being done in Q3 and Q4. So I think industry should be largely flattish or maybe in a single-digit growth kind of a category of the room air conditioner part. But we've added some customers on the component side, and we expect to outnumber the industry by a few percentage points, as we've always done. That's our view on the industry of room air conditioners part. On export front, there's a shift which is happening. We are seeing some multinational companies shifting their geographies to India, and they have started testing the waters right now. And we are seeing the export number, which was happening only 1 lakh air conditioners were getting exported has come to almost about 5.5 lakhs. So this number is also going to go up as the multinational companies will shift their geographies to India to cater to Middle East and South African markets. As the scene has been in the mobile case, I think this number will also add up to the manufacturing footprint of India. And because for us, the addressable market is what is getting manufactured in India, whether for domestic market or global market doesn't impact us. Plus, overall, Amber is also endeavoring on its own for export opportunities. We are very hopeful to receive orders for our first finished goods category in the Q1 of the next financial years. So we've already crossed some customers' validation assessments, and now the Bureau of Energy applications are going on. Once we clear that, we will see first orders coming in from next Q1 of the next financial year.
Thank you. Mr. Nirav Vasa, may we request you to rejoin the question queue, please? Thank you. Our next question is from the line of Abhishek from DSP. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, just a couple of questions. First is, you called out this consumer durable, top line to almost double in a couple of years from FY24. How should we look at the mix in terms of the PCBAs, in terms of the new areas which you spoke about, industrial, railways, defense? What can be the contribution from that, or will it be largely from the current segment that you're doing?
No, Abhishek, we've guided that the electronics division and the mobility application division, which is railway subsystem division, Sidwal, both are likely to double its revenue in next 2 years' time. That the reasoning is very simple. We are adding new applications, new product categories, new customers, and we are also deep diving into the bill of material of more passenger cars. So earlier, as explained, we were just giving 4% of the bill of material of a passenger car, which was only air conditioner as a product category. But now we have entered into multiple product categories, which orders have also started flowing in. And that's why we are very confident of achieving the doubling of revenue.
So, sir, my question was that this new product which you're adding, what can be the contribution of top line when you double it in next 2 years? Will it be like 5-10%, or can it be meaningfully higher? Is what I was trying to understand.
No, it will start with smaller number. Normally, because these are very technical oriented products, so customers will not give you 100% of share of business on day one. So we've started receiving orders. Our supplies will start going in for next financial year. So next year, I would say the contribution should be about 10 to 15%. But 2 years from now, the contribution will be almost as big as 35 to 40%.
Got that. So major portion of growth will come in from new products. Just to understand.
That's right. Yeah.
And so just one other thing is terms of your gross margins. We see some improvement there, both on standalone and console. So how are you looking at the overall competitive scenario, commodity inflation? Just some comments that will be helpful, sir, in terms of the gross margin.
As far as right now, if we see the scenario, commodities have more or less settled and eased off, so we don't see any big spike coming in from commodity cycle. If it does so happen, we've demonstrated in past also that we are able to pass on to our customers on a quarterly lag basis. So because we are entering into better profile of products category moving forward in electronics and in mobility applications. So on a console level, there should be seen some margin improvement should be seen.
Thank you. Mr. Abhishek, may we request you to rejoin the question queue, please? Our next question is from the line of Madhav from FIL. Please go ahead. Mr. Madhav, please go ahead with your question. I request the management we move to the next question as there is no response. Our next question is from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
I just wanted to sort of
Mr. Deepak Krishnan, may we request you to use your handset, please?
Yeah, I'm on handset mode. Can you hear me fine?
Yes, now we can hear you, sir. Please go ahead.
Yeah. I just wanted to sort of understand the weakness in the motor segment margin this particular quarter. What was the factor that we're back to single digits after, sustaining at double digits for a long time?
In the motors division, it was particularly because we sold more of a BLDC motors, which are lesser margin businesses, and our export shipments did not happen the way we anticipated. So that's the reason why a small dip. But I think the double-digit numbers are maintainable for this division.
For the full year, we should be back to double digit.
That's right. Yeah.
And in terms of overall inventory, given how Q2 was and maybe early part of festive season, how do you see the AC market evolving? Just Q2 and Q3, any sense of how the market trends have been so far?
Market trend, as explained earlier, I'll repeat it again. It's basically what we are seeing is mixed signals from various customers. Some of them are sitting with inventory. Some of them have been able to liquidate them. And some of them have liquidated some modules, but some modules are stuck. So overall, if I talk about the industry level, industry is heading towards a normalized inventory level. I think by Q3, we should be able to, by end of Q3, we should be able to see a completely normalized inventory levels. So we should start Q4 at a good note.
Thank you. May we request you to rejoin the question queue, please? Our next question is from the line of Ms. Alok Deshpande from Nuvama Institutional Equities. Please go ahead.
Yeah, hi, good morning, gentlemen. Two questions. First, on the electronics division, you mentioned about the growth and the margins. If you could give some sense on what can be the typical working capital dynamics going forward, what will be the asset terms on this? That is question number one. And secondly, any outlook that you can give on the motors part of the strategy there beyond this year?
Hello, can you repeat your second question? The first one was the electronics division. Second one was?
On motors, sir. Motors. The strategy going forward on motors beyond this year.
Okay. So on the electronic side, the net working capital days, they're not much. I mean, the asset turns are pretty good in that division. The asset turns are as good as about 11 to 12. And ROCs in that division is in the range of 26 to 27%. Net working capital days will be in the range of about 25 days. So we expect it should be in the same range moving forward as well. And on the motors front, what we are doing is we are opening our global doors, as well as we have entered into industrial and commercial application of air conditioners. We have started giving motors for VRV applications, for ductables, for package units, for fan coil units, etc. That's also moving positive for us. And plus, of course, in the room air conditioner division, we did not have BLDC motors, which we have now been able to successfully launch. So this is one part of the strategy. Second part of the strategy is we are entering into washing machine motors and chimney motors. Probably next year we should see some orders coming from washing machine sectors also.
So any chance that growth will accelerate in motors?
Yeah, we expect decent growth in next year. I think if all goes positive, we should see a growth rate of about 30 to 35% in the motor space over this year, next year.
Understood. Thank you so much, sir.
Thank you. Our next question is from the line of Adesh from Motilal AMC. Please go ahead.
Hello, sir. Sir, in Sidwal, we are seeing that your current order book is around 1,100 odd crores. Sir, any sense on where can this number settle over the next 2 to 3 years?
Well, I mean, a lot of activities are going on in that division, so very difficult to give you a number. But if our global doors open, which we are likely to open, it can be a substantial number to add up to this number. But we can't give that number right now. I think that's why we have guided that we are confident of doubling the revenue in the next 2 years. But yes, that division is heading towards a very robust growth moving forward.
Right. So, sir, doubling of revenues will be from FY24 base or FY23 base?
No, 24 base, current year base.
Okay. Okay, sir. Thank you. All the best, sir.
Thank you.
Thank you. Our next question is from the line of Dhruvesh Shah from JM Financial Asset Management. Please go ahead.
Hi, sir. Sir, my question is with respect to the new expansion that you are making, that is into the EV auto space. Can you please describe or just speak two lines on it as to whether it is a two-wheeler, four-wheeler, where exactly, what domain exactly are you planning in that space, and what is the right to win versus that of the other peers? Thank you.
We have cracked four-wheeler EV first, and we have not become the tier 1. We have become tier 2 supplier right now. And we are adding two-wheeler EV also very soon. I think probably by Q4 we should be able to add two-wheeler also, because that's a very focused segment for us. What we are offering uniquely is the geographical spread as well as our R&D capabilities, which we have built over the last 5 years. So that's a uniqueness which we are offering. And we have plants in North India, west part of India, and in the southern part of India. So that's helping us in this strategy.
Understood. Are we in a position to name any clients?
No, that's NDA been signed. That's a company sensitive information.
No problem. Thank you. Best wishes.
Thank you. Our next question is from the line of Dhananjay Bagrodia from ASK. Please go ahead.
Hi, sir. Congratulations. The same numbers. Just wanted to ask you, between the room AC and motors, what would have been the split this quarter?
So room AC has been, on a control level, it has come down to 40%. And
just number-wise, what would have been, let's say last quarter's 1,242, what would have been this quarter?
Sorry?
Last quarter, it was 1,242 room AC. What would have been this quarter?
I don't have the number right now. Sachin, do you have the number with you? So Dhananjay, what we'll do is we'll send you the numbers.
Okay, sure. And so, just to clarify, what would be your capex for this quarter then? For this year then? What is going to be capex for this year?
So this year we have guided that we will be in the range of 350 to 380 crores.
Okay, perfect. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question of our question and answer session. I would now like to hand the conference over to Mr. Jasbir Singh for closing comments.
Thank you everyone for joining on the call, and I hope we have been able to address all your queries. I think 2 queries have not been addressed, which we will be sending you separately to Dhananjay and to Natasha. For any further information, kindly get in touch with Rohit or SGA, our investor relation advisors. Thank you very much and have a good day ahead.
Thank you. On behalf of Amber Enterprises India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.